The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome, traders and traderettes. It is another edition of the Power Trading Hour at TFNN.com, your headquarters for technical trading and investing. And as we look at that today, we are getting some action. Yesterday I talked about not getting in front of the Fed announcement. It just didn't seem to me the risk-reward was there. Of course, he came out with his minutes. Everything looked good. Then he started yapping, and things did not. We just had the Fed minutes out. We'll get into all those in just a little bit, but we've got some time. Right now we're looking at the S&P off 5 point, almost 6 points. We've got a very interesting move out here. A lot of volume very early in the day. A pullback to what it was about 1668, something like that. Then a rally right back up. Couldn't really go back and hit the high of 1687 today. Rolled back over, and we've been rolling ever since. In fact, we're now at 1660. I actually put out an alert for my newsletter readers in the path of least resistance to watch out for a fast market. One way or the other, we were going to break hard. I suspected we had maybe 15 points higher, and I'm always looking for probably about 100 points lower out here. And we are going to be moving very strongly up 150 points on the Dow today at the highs, down 35 points as we speak. And we're going to be going into extremely light volumes starting probably by around 1 or 2 o'clock tomorrow. We've got a 3-day weekend, and we'll see how this plays out. But I think that we've seen at least a little respite in the daily churn up, and we might find, especially in light volume, a huge push to get out over the weekend. We'll get into the reasons why. But we'll keep an eye on that S&P. It'll be bouncing around fairly significantly. I don't expect the bulls to give up easily. They have been on the bull wagon. They are hooked as strongly as any crack addict. They've bought and they've bought and they've bought. And every time they've been rewarded. The question is, what will it take for them to understand that maybe this isn't the time to buy? But I do expect them to try to come back and at least attempt some rallies, maybe even yet today, probably tomorrow, maybe a little bit into Friday. But I can really tell you that the exits are going to be very narrow over the next couple of days. If we should get some movement down, I would not be surprised to see it very fast and continue these kinds of 10, 15 point swings intraday in the marketplace. It's going to be great for day traders and swing traders all the same. On this day, April 24th in 1843, a massive wagon train made up of 1,000 settlers and 1,000 head of cattle sets off down the Oregon Trail from Independence, Missouri, which I lived very close to for about 18 years, the home of Harry Truman, the President of the United States at one time, the only man to drop a nuclear bomb, or actually an atomic bomb. Known as the Great Immigration, the expedition came 2 years after the first modest party of about 50 settlers that made the long overland journey to Oregon. So it's kind of hard to think that just 160 years ago, no electricity, no motorbikes, no gasoline. If you're lucky, you had some candles, and just how tough it was all those years ago. But the settling of the country actually, I think the railroads really came in earnest in the 1870s, 1880s. Really started the, the Golden Spike. I think it was in the 1880s. A long time ago, but on this day, the longest trip starts with the first step, and it did. Ben Bernanke, we were talking about it. He was on Capitol Hill having a testimony, and everything was great until a Republican, was a senator, I think so, asked him 4 times, 4 different ways, and finally Ben actually said this: I cannot rule out slowing asset purchases before Labor Day. And that was it. Boy, the markets whacked down to about 1666, 1668, if I remember right, and then slowly recovered up to about 83, 84, before they started rolling over again. That was basically that. Some people are calling this the Iraq financial policy, which is there is no easy way to get out of it. And he has gone all in. He's had his operation and basically threw all his troops against it. And now we see the Fed notes where we now have 3, I think it was 3, different Fed members saying it is time to start pulling back, that the unintended events of quantitative easing are causing major problems. I think they all sit there and see the stock market and say, bubble, bubble, toil and trouble, and at least enough of them are out here to cause issues. Of course, they changed the language to throttling last time. It is back pretty much at that, but we have 2 more people, at least on the side of being more hawkish about the easy money policy. Bernanke, the way I took it was that he, in his testimony when I watched it, was that he is fairly upset that the politicians are willing to do nothing. He doesn't want to get blamed for a giant bubble. I always wondered why he let it go so far. He probably should have cut this off way back in March, but there hasn't been a Fed president that has not waited way too long to turn off the spigot of easy money throughout actually since they've been in existence. They have always left it run long enough to cause inflation and problems. Of course, they never see the problem coming in the first place. They're always late to the party and late to leave. So we'll have to see it. But many of the pundits in the economic world are calling this the Bernanke-Iraqi financial policy, which I thought was kind of interesting, that there's no way to get out. It was just kind of on a side note. It was kind of interesting. Cuba has authorized individual imports of appliances like air conditioner, refrigerators, and microwaves, lifting a ban that has been in place since 2005. Of course, us being here in Tampa, a big community of expats from Cuba. Of course, Miami, much so. But we might be seeing the easing of the last day of the Fidel communists out there. They may actually be willing to give up the dogma that is basically made prisoners of everybody on that island since, 1962? But kind of interesting that they are now allowing people to have electrical appliances for the first time in 8 years. Maybe something's happening there. Another thing that was interesting is we did have some hearings about the IRS today. Not so much about the hearings themselves, but my couple of years as on a grand jury and how it actually played out. The Fifth Amendment is one of the ones that we should cherish the most of the first 10. But what is interesting was that they allowed the gal to make a statement. In the years that I was on the grand jury, and every Friday, every other Friday, for 2 years, I was impaneled. Oh, God, talk about a burden. At least the trial's over in a few weeks. But every other Friday, you had to go downtown to the courthouse, sit through a lot of this stuff. It actually became very interesting to me because I saw lots of criminals. Some of them you would have seen in the movie Casino. They were from downtown Kansas City. Kind of interesting to see the insides of how it works. A grand jury is a terrible and powerful thing. Just be happy that it is rare to find prosecutors that are so insane that they would use the full power willy-nilly. But it is, they have the ability, some people have said that a grand jury can indict a ham sandwich. And I've seen almost like that. I actually got kicked off of one, and the judge brought me back for another one. After he found out why they kicked me off, I wouldn't kowtow to, it was kind of a race riot kind of bunch that were after a couple of the cops' heads. And the people there in the prosecutor's office were wanting to get elected more than actually abide the spirit of the law. The only thing that I thought was very interesting is they allowed her to make a speech. Each time that ever happened, they threatened the witnesses that we had with going to jail. And actually, if they claimed the Fifth after they said even one word, they would go ahead and force them to actually testify. I just thought it was very strange. I guess I don't think that there's any real difference between a testimony in front of a Congress or a grand jury. Maybe there is. Everybody I've heard talk about it today said there's not. Fifth Amendment is still one of the most important things that we have out here. But just very interesting. Like I said, everybody that ever went in front of us that said a word other than I'm claiming the Fifth Amendment, the prosecutors went after them and put them in jail, which I thought was, at least let you know that if you ever, or maybe any of your family ever gets dragged in front of a grand jury, you better decide right up in front, or if you're willing to say anything else, then I'm claiming the Fifth Amendment. Because if you say anything else, it can be considered testimony, and they can put you in jail for that. And I've seen it firsthand, and some of the times it has been, how can I say it, misused. So just be careful, and to make sure your kids and your family all know that it is an important right out there. George Soros, I was thinking about this today. Economic history is a never-ending series of episodes based on falsehoods and lies, not truth. It represents the path to big money. The object is to recognize the trend whose premise is false, ride that trend, and step off before it's discredited. What can you say about him? I do want to get in. I think we were going to be going to break here in just a second, if I'm not mistaken. I don't hear the music yet. But when we get back, I want to talk a little bit about statistics, lies, damn lies, and statistics. And you can probably think about this. Which of these two, if you're watching a Tiger TV, which of these two sequences of heads and tails of a coin flip are more likely to occur? And we'll answer that question when we come back. The first one is a series of 5 heads and 5 tails. The other one is fairly random. Think about that for a second. We'll be back in a minute.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we see the market bouncing around just above the 1660 level on the S&P cash. We've got some tick marks that are been hitting the floor and actually probably going subterranean, plus or minus 1,400 ticks. Probably a good sign that we've got a fast market. I suspect that that market will continue. Like I said, I actually put out a special report, I don't know, about 11 o'clock, to watch out for very fast markets. There are conditions when you find markets like this that are fairly unstable. And things happen, and they can move extremely fast, and especially with a light volume that we're going to start seeing over the next couple of days. Will the bulls come back and try again? I suspect they will, but I think that we saw today, and especially in the Fed notes today too, that we are getting closer to them pulling back the money than sooner rather than later, and that he would not put it off another issue. One of the other things is that there will be a great deal of people that were supposed to be on the unemployment rolls coming off because of their 99-week rollover. In 2.5 weeks, we will be seeing that employment report, and everybody suspects that we will be down another 0.3% on the unemployment rate, not because more people are unemployed, but because those people don't see any reason to show up at the unemployment office if they're not going to get a check. And I think a lot of people are thinking that that's going to give Ben Bernanke and his brethren enough cover to start cutting and putting the pressure on politicians to actually get our fiscal policy correct. I think basically Bernanke's giving them a warning that it's time to come to God. Anyway, we were talking about lies, damn lies, and statistics. Hopefully everybody's seen this on either Tiger TV or on In the Den. But which is more statistically more likely to happen? 5 heads, 5 tails in a row, or alternating heads, tails, heads, tails, heads, tails? And the answer is both of them are identically as likely to occur. We have a very humans traditionally have a very hard time understanding statistics and how they work. But the reason I bring this up is a lot of people are saying, "Well, we've been up so many days in a row," and it's like a coin flip. Does it really matter what the flip was before? Are the odds still 50-50 when you flip that coin? The answer is yes. So when I get a lot of people saying, well, it's not going to go past 16, the answer is it just doesn't very often. It can do that. Before I started the show, I flipped a quarter 25 times, and it came out heads every single time. Now, is that something that's statistically exciting? Well, if I really did it, I was actually fibbing about it. If I really flipped the quarter 25 times and it came out heads every time, it would be something. Now, if I'd done it 2,000 times and ran the last 25 times heads, it would not be. And that's what most people don't understand in the stock market. That is that the last 16 days may have been up, but that's over a series and a long series. Just like the heads and tails, it can continue to go longer than most people think if you just get into kind of that most markets or even just a coin flip has out there. So don't get too excited about when you hear about how many days up or down. It can happen with a coin flip, which is truly random. So don't get too fired up about that. I think just one last thing statistically that I bring up every once in a while, and especially with the IRS and the news right now, that the easiest way to find fraud in statistics is look for the number 7. People are about 2 times as likely to pick number 7 out of a number between a 0 and 9 than any other number. If you tell them, what is your pick a number, any number between a 0 and 9 in the next 5 seconds, very, very likely to pick 7. Unfortunately, they do the same thing when they prepare phony books, and that's how the IRS actually knows. They have algorithms to go out there and look for the number 7 when it's highly statistically improbable it should be in the data. We get back, we're going to get right into charts and see what's moving out there and take a look at the volume and how the S&P is moving here. Be back in a second.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, we have action, and we have the most volume coming back at the bottom of the hour in my show in months with 3 billion shares already through the gates, would project at a 5.2 billion share day on the consolidated New York Stock Exchange tape. If you're new to listening to the show, Tom O'Brien and many other hosts out here will give you the floor traded on the New York Stock Exchange. That does not include any stocks traded on ECNs, and that number, of course, is a lot lower. Big enough sample size that the ratios will be the same, but always remember which number you're listening to, the overall NYSE total shares, also called the consolidated tape, or just the floor-traded version. Normally, that's somewhere between 600 million and 1.5 million, and 1.5 billion, something like that. Kind of at the highs. Normally, we've got somewhere between 2.8 billion and 5.6, maybe even 6 billion shares at the very highs on the consolidated tape, mostly because those ECNs run a lot of the background noise of high-frequency trading, which will always be interesting. Of course, we're out here at 1,660 on the S&P cash. We are off a 9, which is just 0.5% so far. It's going to be very interesting to watch the close out here. I expect to see very strong swings before the end of the day. I would not be surprised to see moves of 4 or 5 points in the S&P in less than a minute as we go into the close today. It will be a buzzsaw, so just make sure that you've got a quick mouse finger ready to go and a good internet connection and a strong back, because this is what every day was like in the dot-com bust, and I suspect we are in for a very exciting market over the next 2 days as we run into the weekend. And what else? We've had major reversals if you just look at the most of the stocks out here in the marketplace. Anyway, I wanted to look at a few stocks that had been in the news today. SWI, basically solar winds. A lot of these solar companies I've been warning everybody about. You had huge signals in SWI back at the top, and that was a test on almost 50% lighter volume. SWI solar winds, September 14th, 2012, had 930,000 shares at almost $61, $60.95. You went a good 60 cents higher than that on March 14th of this year with basically just a hair under 600,000 shares. But this is markets crash at the bottom, and so do stocks. And this is where you see a lot of the kind of volume come back in. We were going up against huge volume up candles and maybe not have all that, but there's every indication this thing wants to get back in to the $39.10 low from July 9th of last year. Nice gaps down here, and I suspect we're going to get all of those filled very soon. It is a business, like most people that have been reminding everybody, that only is profitable as long as the government supports it. We see that in Tesla, Solar Winds, Solar City, which is another one that, what is it, SCTY? It certainly is. And this thing looks like it's coming off and maybe getting ready for its blow-off. And kind of a little hammer here. And I think maybe this one may have just a little bit more. But again, all these companies that are run or are part of Elon Musk's empire of companies, probably the satellites, probably the most fiscally responsible. Right now, I think someone said that there's almost, for every car sold, you would be paying in forward-looking statements $500,000 at Tesla. So be very wary of it. There's a few stocks out here that I had in my newsletter this morning that we were looking at that may be putting in highs, and Buffalo Wild Wings is one of them. BWLD. This thing is making a nice reversal up here at the top. Went almost $1.30 higher than the last previous high, which was April 26th of this year. With 720,000 shares, you had. Let me get in here. You had 300,000 yesterday, and we've got 273,000 so far. So some of these are really making some decent signals. They put some highs in. Another one that was interesting was HPQ. This thing looks like it could be setting up its ABC back down. And let's look at the quick one up here. I'm actually, it's hard to make the right ABC here. I was kind of thinking it actually started at this gap back down here, which is probably more applicable, that this could easily get back into this $18, $19 range, which is where this thing last took off with volume. Really kind of just grazed it on April 19th with 28 million shares, but I suspect probably a much better chance now this thing is getting back into those levels. S&P continues to weaken, 1657. Almost feel like I'm calling a horse race here, but, we're having a volume which is strong now, which is normally weak in the last 30 minutes of my show, really coming on along with the movement in this market, which is going to be strong and wicked and fast, I suspect. And probably after we see noon, maybe 1 o'clock tomorrow, the volume will shrink, and I suspect a drip, drip, drip of selling probably into Friday's close with a thin market, but not many buyers after the threat of Ben Bernanke's less than QE. Jones Group is another one I had in my newsletter today. If we're looking for stocks that have and are testing previous highs on a lighter volume, the Jones Group is an excellent example of a sell signal out here. You saw $15.07 on April 12th. That had 4.7 million shares. You tested it on 1.2 million shares. We've been closing back in below the high of that April 12th day. Not a lot of volume so far, but pretty much a good signal that if you were in that thing, it's time to get out. Pretty much the same kind of thing in Man Life Financial, which is MFC, 1570 on February 12th, 4.3 million shares, less than 50% of the volume at the highs where we have here 1.2 million shares today. Nice little hammer candle out there. There's an embarrassment of riches. I can only imagine what my newsletters is going to look like tomorrow with all the stocks that hit the scan. What else do we have? Another one, M&T Bank Corporation, MTB. This thing was testing the previous $105.33 high from October 18th of last year, 1.6 million shares. We saw 480,000. So coming in with 25% of volume, just ain't going to hack it. And this last leg, not really strong out there for what you can see. SanDisk, which I've been waiting for this thing to actually reverse, probably a good indication that the techs were ready to roll over, was a test of the April 12th high, $58.92, 4.5 million shares. And we did crack that and by a good buck out here on May 17th. But 3.7 million shares. We are back in the trading range and a valid sell signal if you were along this thing. TRW, another one of these big car company infrastructure stocks. You would have caught this in my newsletter this morning. It had tested the previous high on lighter volume and already closed back in the range. We're looking at the 63.19 level from February 15th. 63.19 went above it to 63.80 on May 21st. But again, half of the volume is not going to cut it. What else do we have out here? I'm trying to get a lot of stuff in today because I know we're going to be busy coming into the close. Almost feel like calling the horse race out here. Another one, Terrarium SA. Don't know much about this company. TX is a symbol. Almost 700,000 shares on January 7th high of this year, 24.13. Almost 700,000 shares. Of course, cracked it this morning, 130,000 shares. Just ain't going to cut it. So we've got a lot of stocks out here moving. I got plenty of time out here. Why don't we go through some of the Gartley patterns out here that we had in our scan from last night. And, of course, everybody that listens to TFNN knows that we've got the art of timing the trade charts out. And every night, fairly early, before 8 o'clock, you're going to get some nice patterns out there in the Gartley patterns and see how some of these things are actually playing out. Let's see what else we have out here. We're looking at for some of them. American Public Education here. Let's take a look at this one. A pretty good one, especially in the horrible sector of for-profit education. APEI is the symbol on this one, and this is exactly what you're kind of looking for in a Gartley pattern. Maybe the B2C leg a little long, but this is exactly the kind of pattern we're looking for. The X to A point, fairly strong down, bounced on a gap that had been around for a little while. Volume was 470,000 shares. Again, this is a little lighter volume than normally we trade in the newsletter, but a good indication of what we're actually looking for out here. You had decent volume on the May 2nd low out here at 31.95, but we got right up to the target, which was 39.39, and actually got to 39.49 yesterday, and it has reversed. And, of course, you had this chart last night if you had the art of timing the trade charts. Let's see what else we have out here. Diebold. I wanted to look at Oracle out here. We got Diebold first, which is BD, the manufacturer of ATM machines. Now, this one, the energy up on this last leg was probably a little bit better. but pretty much got to its D target at $32.08. Again, if you are not familiar with Gartley patterns, you might check out the videos on the Art of Timing the Trade Charts website that I did, and it's got at least the basics. I recommend reading Tom's book highly to get the full skinny on it, but not too bad. Anyway, volume was energy was just a little bit light, but not a bad-looking Gartley pattern out here, especially when you look at it coming back and filling these high volume gaps out here on lighter volume. This thing came down with monster volume on the 24th of January of 3.4 million shares. And, of course, what do we get? Yes, this big candle, 1.3 million shares on the 20th. Last couple of days, this thing's starting to roll over out here. The one that I thought was going to be most interesting today was Oracle. This thing has been kind of lumbering around at its pattern, and yes, it is broken, and it was probably the biggest one that had light volume up on the C to D leg. This thing hit exactly to its D target, which came in at $35.30. Hopefully Tom will show this one on his show tonight, because this is exactly how these things work. It shows how my power law vector indicator shows the energy up and down, and this last leg back up took you right up into the gap, right into the Gartley. You have an embarrassment of riches in technical charting here that show you that this was probably the point at which Oracle was going to roll over. Again, if you can't see this real well, we had basically my power law vector number puts together both time, price, and volume to give you a good idea of how much energy is in each individual leg. And what you'll see is this is probably one of the biggest differentials from the downside, the X to A leg in a Gartley, from the C to D leg in a Gartley. If you're just listening to me, of course, you can go to Channel 14 on Tiger TV and look at all of these. Would be very nice to see these tonight out here. So what else do we have going on? S&P out here, 1658 right now, closing in on 3.2 billion shares. We'll have to see how this thing closes out. Got about a minute before the end of this. You can give me a call at 877-927-6648, 877-927-6648. Still have plenty of time to call in at the next break and get in before the end of the segment. See if we have anything else. Just wanted to look at GLD real quick. Of course, this thing was down. Last I looked, gold was down about $18. Maybe we get a closer one on here. 1740 out here. Well, you had silver off 16 cents. Crude West Texas Intermediate off $2. And I think copper was up when I looked at it about 2 cents a little earlier. But we've got just about everything moving out here. Of course, huge move in bonds interday today with Bernanke's testimony. So a lot of things going on here that we want to be watching in these markets. Anyway, wanted to look at GLD. This thing still needs just a little bit more to get down here and give us one more signal, which I think we're probably going to get maybe on Friday. So give us a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
If you're just joining us at TFNN, we've had kind of a major reversal signal out here today in the S&Ps at least. We've got a high of 1687.18. We're back just a hair under 1660 right now. Volume has gone very quiet over the last about 10 minutes. 2.2 billion shares. I think a lot of people are looking to blink before the close today. Of course, we're going into a 3-day weekend. Volume will start going light tomorrow, but a fairly decent sign of at least a few days respite from the move up here, and with a massive lower ticks. Even if you are thinking that this is going to be a few-day reversal, normally what you are looking for is 2 or 3 days later, a tick or a lower tick without a lot of energy, but a very low tick number. We've been hitting in the 1400s. That is normally your buy signal out here. I suspect that we've got a lot of downside to go. But if we see that high tick number or no energy, that would be probably a good idea that that will be where the next bull attempt will be. But like I said, probably with a lighter volume, if we don't get something early tomorrow, the drip, drip, drip into the weekend where a lot of people are trying to exit stage left as quietly as possible. 9 points down is no big deal. That we have closed down, though, would make a lot of people be probably a little nervous who think that the market can only go up. and we'll look at that. Anyway, looking at more Gartley patterns in the Art of Timing the Trade charts. Winnebago Industries looks like this one has done a fairly decent job of completing its Gartley pattern. At least it's a bearish Gartley 222. And this thing, pretty nice pattern out here. The one thing you really want to look at early on is how much energy from the X to A and then the C to D, which gives you a good indication. A lot of times the A to B and B to C's are just a couple of days, but you can really see the energy in the longer trends, which are almost always longer in the X to A and C to D legs. But what we had is basically about 33% lighter energy on the C to D leg coming back up in Winnebago, WGO. So another good one to look at if you're learning about Gartley patterns and how they work. Of course, we talked about Oracle. There are a few other ones. What was it? The DKS, Dick Sports, I think that's what it was. Another one that I liked from last night. This thing spiked up. Didn't quite make it yesterday. It was looking for 55.46, but same kind of thing. The last big leg out here, and huge volume on the C point and a huge gap. So this thing would most likely, in a market reversal, take you back down in the $45 range on Dick's Sporting Goods, DKS. And, of course, we saw a lot of movement. Target today, TGT. We'll take a quick look on that. We got just about a minute left to go here. There we go. And let's take a look at it. Fairly decent move in Target here today. Certainly looks like the retailers like Walmart and Target are finding fewer buyers. Most people saving their money up for bigger ticket items. At least that is the current speculation. Basically, support comes back into this 65, high 65s, low 66 level. We got to 67 at 58. I would look for this thing probably to gap back down tomorrow into that $66 level. You all have a great and safe day. We'll be here tomorrow, same bat channel, same bat time. Look for some action before the end of the day here. 1660 on the S&P cash.